Welcome back to the program. You're still watching Market View. This is the Thursday edition as we get into our market analysis today. Perhaps the whirlwind tour of the financial world. We are seeing some really interesting developments there as well. Some indices on the red and some on the green per usual, from a modest sleep on the US markets. That's what we are seeing, to some impressive leaps really, if you think about it, across Europe and Asia, just looking at those numbers. Perhaps, Sanel, as I welcome you to the program, we could start with the US markets today. We are seeing the Dow Jones and the Nasdaq, as well as the S&P 500, all took a bit of a dip today. Declines ranging between what, 0.25% as well as 0.31%. The US markets are showing a bit of red. What's behind this dip?
Thank you, Mr. Ngumalo, and good afternoon to the viewer. So what we are seeing happening in the US, Mr. Ngumalo, as you may be aware, yesterday the Federal Reserve Bank actually came out to announce that they're cutting the base or the base policy rate by some 50 percentage points there. So that's like 50%. So what markets are now what markets were mulling over yesterday was the fact that, is this signaling deeper economic problems in terms of growth, or is it just a catch-up type of catch-up strategy from the Federal Reserve Bank, considering that if you look across Europe, you look at London, you look at the greater Eurozone, you look at Japan, you look at China, all those major markets had already started a downward trend in terms of their interest rates. So the US was probably playing catch-up, or is it signaling issues that are deeper and entrenched within the US economy in terms of the weakening growth prospects, in terms of how the job numbers are going to look? So that's what the markets were trying to take in yesterday, no matter when the data came out. But we are waiting to see how the markets are going to play out today when New York opens up for trade today, I think in about an hour's time. So that's going to give us a clearer indication of how the markets are pricing this, let me just say, this this jumbo type, or this huge interest rate cut, 25% basis point more than markets expected. But, it could be just signaling the fact that markets are just too overcautious.
Yeah. Over in Europe, things are looking a lot brighter. FTSE 100, DAX, CAC 40, all posting solid gains. We are seeing even a surge. It's by 1.98%, I believe. These markets are flexing their muscles today, Sanele. What's fueling this rally?
So when you look into the Euro market and, into London, what we are seeing happening there is, if you look across all the major indices there, they all, just rolling a bit. So now that signals a bit of stability in terms of the monetary policy across the pond, compared to the US, where we saw London cutting the rates in August. We saw the European Union doing that in June, and then holding constant in, say, in August. And same thing, the Bank of England actually held constant even today. So what we are seeing then, Ngumalo, is the fact that markets are seeing that as a more stable monetary policy path, a monetary policy that is accommodative to the growth prospects compared to the monetary policy in the US. So that is why we are seeing this bit of stability within the European markets. And it's also fueled by the fact that, now the Federal Reserve banks have also confirmed that we are now moving into a soft landing economy. So that's why the numbers in Europe are just basically celebrating the trends and the movements that we are seeing there. And also the fact that monetary policy across the pond seemed to be a bit more stable and seemed to move right on time compared to what is happening in the US.
Really interesting. Asian markets are on fire as well. Nikkei up by 2.13%. Hang Seng climbing by 2%. The Nikkei and the Hang Seng are shining really bright. What is driving these gains, and how might global trends affect these markets moving forward?
So what we are seeing there across Asia and Asia Minor is the fact that the markets were somehow waiting for a signal to come from the US in terms of is it really time to start cutting interest rates, and that's what we are seeing happening there. So that cut in the US has actually signaled to markets that no, we are moving to a softer lending environment, and that bodes well for countries, economies like China, which is dealing with a deficient demand. So they didn't want to start cutting too early while the world was just behind. So we're expecting, the Bank of China to cut aggressively as well by another 50% basis point, by 50 percentage points to 100 percentage points, probably sometime this week. And same thing in Japan. What we're seeing is, Japan and China are consumer-driven economies, so a soft lending environment. They're manufacturing hubs, so a soft lending environment actually works for them and actually bodes well for, say, profitability in terms of those that are credit driven. But it also just gives this impetus to China to say, let's just try more of some stimulation towards demand. And now the environment is a bit allowing of that without necessarily triggering capital flights.
Back home, JSE All-Share Index is on the rise, gaining by 0.90%. It's very, one could say it's holding strong, nearly a 1% gain today. What's fueling this resilience?
So what we are seeing, Mr. Nxumalo, is the fact that, yes, yesterday the US came out and said, nah, the time for hard money is over, let's move to soft money. But now what we are waiting to see is what the Federal Reserve, the Reserve Bank of South Africa governor will do today in terms of the monetary policy stance. We've seen inflation coming back to the midpoint, so markets are waiting for a cut in the interest rates today. And domestically, we're expecting that tomorrow. But what we are waiting to see is how much the magnitude and how much does the Reserve Bank want to actually spur business? How much are they going to really try to promote soft lending? Are we really going to go back to those pre-pandemic levels? And how long will it take us to get to that level? So that's what
Perhaps
markets are pricing in right now.
Yeah, Sanele, in the interest of time, let me offer you the grace and allow you to go through all the left indices, the strategy markets, commodities, and currencies. Briefly, please.
All right, thank you, Mr. Nwelo. So in terms of the domestic market, if you look at the Eswatini Stock Exchange, it still remains a bit steady, though we have seen, companies like First National Bank really coming out to say that they are projecting record profits, just that unfortunately those are oversubscribed stocks in the Eswatini Stock Exchange. If you move on into commodities, what you're now going to see is the fact that with this cut in interest rates, now that's going to signal that demand is going to bounce back. We're already starting to see the price of Brent crude on an upward tick, so closing at around $74 per barrels per $74 per barrel yesterday. And when you're looking in terms of gold, because of that in uncertainty in terms of whether the aggressive rate cut was due to a catch-up type of arrangement, or is it due to deposited economic crisis, economic variables within the US. So that's why we're seeing gold still holding a bit steady, the while markets are trying to just process what's going to happen in terms of the overall economy. And then when you look into the exchange rate, you can see that the rand held strong across all major currencies, purely because we're expecting this rate cut to come in today in Eswatini, and once that comes in, we're also expecting to sell. Well, there's also that is being balanced by the uncertainty in the US in terms of the health of the US economy. So that's why you can see the Lilangan is doing very well across the board, be it against the dollar, the yen, or the euro. Thank you, Mr. Nxumalo.
Thank you, Sanele. Thank you to our viewers for staying with us. That's the end of the show. Goodbye.